ABC Listen. Podcasts, radio, news, music and more.
Shocking evidence, jury drama and witness cross-examinations. The Mushroom Case Daily podcast took you inside one extraordinary trial. And now we're back with The Case Of, where we report the in-depth detail of how Australian criminal courts work and who's in there each week. And we're starting with the case of the croc wrangler, Matt Wright.
Mr. Wright denies any wrongdoing.
To hear more, search for the new podcast, The Case Of. It's on the ABC Listen app or wherever you get your podcasts.
For a very long time, to buy a home in Australia, you needed a 20% deposit, or you'd have to pay big insurance fees. It was achievable 20 or 30 years ago, but now with house prices quite often up around the $1 million mark or more, it's asking a lot. Well, this week the government expanded a 5% deposit scheme for first home buyers. Today, finance expert Alan Kohler on how it works and why he's a huge fan of it. I'm Sam Hawley on Gadigal land in Sydney. This is ABC News Daily. Alan, saving a 20% deposit to buy a home is a really, really hard thing to do in Australia right now, isn't it? Because property prices are ridiculously high.
Oh, yeah, that's right. So the median house price in Sydney is 1.2 million. You know, 20% of that is, 250,000 or something. I mean, economists usually kind of talk about saving 20%. People can save up to 20% of their income. So saving that, it's like 12 years.
Oh, my gosh.
I mean, look, it's worth recalling that the lender's mortgage insurance thing was introduced by John Howard at the same time as the GST, and it was done to protect the banks. So he put in the banking laws that the banks aren't allowed to lend on mortgages unless the person has a 20% deposit. And if they do, if it's less than 20%, they have to take out LMI, lender's mortgage insurance. And so that kind of created this industry of lender's mortgage insurance, which, as you say, is quite expensive.
How did it protect the banks, this insurance?
Well, the theory, the idea is that if there's a default, then the banks don't lose out because the insurer comes up with the money. Basically what happens is if there's a default, that is to say the person can't pay their mortgage repayments, the bank takes over the house and then sells it. And if the house sells for less than the mortgage, they're down, they've lost money, right? And the lender's mortgage insurance, the job of the insurer is to pay the difference between what the house sells for and what the mortgage is. That's the purpose of it. And the thing is that there are hardly any defaults in Australia. I mean, it's not something that happens.
No, because people prioritise paying off their mortgage.
Well, it really only happens when people lose their jobs.
Yeah.
So defaults really only happen when unemployment goes up. And really, since the 1991 recession, unemployment has been pretty much under control.
Okay, so Alan, this 20% deposit nowadays takes a very, very long time to save up. So to help with that massive task, in 2020, the Morrison government brought in this 5% deposit scheme for first home buyers, but couples had to earn under $200,000 a year. Now, the current government's announced that from next month, it's expanding that for every first home buyer, regardless of what they earn. So what's changed?
Well, the change is basically that the government has become the national monopoly lender's mortgage insurer. But basically the government's taking over that industry.
Our 5% deposit plan will be open to every Australian looking to buy their first home. And you won't have to pay a single dollar in mortgage insurance. Our government will cover it.
It basically means that the government is, in essence, insuring the mortgage for free.
Right. So if someone defaults on their repayments, on their mortgage or their home, the government picks up the cost for the bank.
Yeah. That's the idea. And really, as I say, there are hardly any defaults. So the good thing about this policy is that it actually will make a difference to people, and it will cost the government almost nothing, probably absolutely zero, which I think is a ripping policy. It's great. I mean, so they should.
Okay, and there's also a higher limit now that the government's put in place on the cost of the property that people can buy with that 5% deposit, which helps as well.
Yeah, well, that's right. I mean, the way house prices have been rising, the previous limit of 900,000 was pointless. I mean, 1.5 million is much more realistic.
Yeah, so the new figure is 1.5 million in Sydney, and it's a bit less everywhere else. So just let's look at an example then, Alan. If you want to buy $1 million apartment, which a lot of people are having to pay at this point, how much is a 5% deposit, and how much sooner could you get into the market because you're saving time not having to save up 20%?
Well, obviously 5% is 50,000 as opposed to 200,000. I actually think what's more likely to happen is that the lower deposit, the 5% deposit, means that more parents can kick in. 200,000, a few parents could come up with that, but not that many. 50,000 is much more doable, I think, for people.
Interesting.
But, it's also the case that it'll only take a few years to save that up if you're on the median average wages or something. I mean, so, it's obviously 50 grand is much more doable.
Yeah, so, I mean, you could save that up, 10 years faster than a 20% deposit, in essence.
Yeah, of course.
Yeah.
That's right.
Okay, well, the Housing Minister, Claire O'Neill, says this scheme will help an entire generation of young people.
So this is going to help tens of thousands more young people into the market every year. It is a really important and good thing for us to do. It's too hard to buy a house in Australia today, and it's appropriate that the Commonwealth Government is leaning in and doing everything we can to support those young people.
It does sound pretty good, doesn't it? Because you'd be out of the rental market sooner, and you can use that money that you've been spending on rent to pay off your own home. The catch, though, I suppose, Alan, is that you have a pretty huge loan to repay, and the interest bills are going to be pretty big.
Yeah, but interest rates coming down. I mean, we're seeing, as a consequence of interest rates coming down, house prices are rising at around about 6% per annum again now, which tells you that the repayments aren't that bad for people. I mean, otherwise house prices wouldn't be going up because people couldn't bid for the houses. So house prices are rising, houses are more affordable because of interest rates coming down, and so I think that's not the issue. I think the main problem, if there is a problem with it, is that it's going to tend to increase house prices a bit more than they would have otherwise gone up, because it puts... it enables more people to bid for houses. But this is really new homes. We're talking about first home buyers, and mostly they're going to be new apartments that they're bidding for.
Yeah.
So I don't think it's necessarily going to... I mean, the Treasury has modelled this, which you can take with a grain of salt, but they reckon that after 6 years it won't do anything to house price. The increase in house prices after 6 years will be zero or close enough to it.
I think 0.5%, I think it predicts over the 6 years.
That's right.
Although, Alan, the opposition's housing spokesman, Andrew Bragg, he reckons it's going to be more than that. And he says the scheme shouldn't be open to everybody.
Well, equity for who? I mean, this is an uncapped scheme which is available to billionaires or the children of billionaires if they want to use a government program. And I think it's bizarre and ridiculous.
So, Alan, that's what's on offer for first home buyers. But they still need the homes to actually buy. Now, to speed up the construction process, the government has decided to pause changes to the construction code. Now, just tell me about that and whether that's going to actually help.
No, well, it's pretty meaningless, this, because the code is actually refreshed every 10 years. They alternate between residential and commercial. So this year, 2025 is due to be a new code or a refreshed code for commercial. The residential one was changed in 2022, and the next lot of changes to the residential code are due after 2030, so around about 2032. The way the construction code works is that it's a national construction code. States have to adopt it, and they all adopt it, and they make little changes to it. They generally adopt it as it is, but not entirely. So they fiddle with it. And then the councils, local councils, are the ones who impose it. And so, I mean, it couldn't be more of a mess, honestly. It's a terrible system, I think. Terrible system. And what the changes in 2022 were mainly all about wheelchair access and energy ratings. So basically, they required that the hallways have to be wider, doors have to be wider, bathrooms have to be bigger for wheelchairs. And I mean, this is every house.
Yeah.
You know, I mean, and it was. I think it was mostly designed to enable people to stay in the houses after they get old, because stamp duty is so high that no one wants to move.
But if you pause it then, so you don't have any more regulations in the mix for a little while, doesn't that speed up the construction of homes, or is that just wishful thinking on the government's part?
Well, it's been paused for 4 years. I mean, it's already been paused for 4 years. They're not doing anything for another 10 years.
Right.
So, yeah, there wasn't going to be anything anyway.
All right, Alan. So we've looked at two areas where the government is trying to solve the housing crisis and make sure young people can actually realise the Australian dream and buy a house or an apartment. So what do you think on balance, though? The second policy you're not a fan of, but the 5% deposit, do you think that could actually change the landscape for young people?
Oh, yeah, I'm a big fan of that. I think it's great. It's a good policy. I think it's one of the better policies I've seen. It's a ripper. And look, the construction code is an issue. It's a problem. But the trouble with that is, you know, once it's been done, once something has been done, like all of the hallways have been widened, and that's it. You know, you can't change it back. So, you know, the Housing Industry Association says those changes in 2022 added $25,000 to the price of a house. Well, that's now locked in. Yeah. That's it.
All right. Well, none of this, though, Alan, really fixes the issue, does it, of demand. There are so many people in need of housing and wanting to get into the housing market. And that number is going to continue to increase, isn't it?
Well, it is. I mean, immigration is coming down, but we've still got a backlog from the last 3 or 4 years where the immigration was enormous. And, you know, the Treasury forecast, which is the only kind of forecast that are done about migration, turned out to be 800,000 or so out. They were out by 800,000. I mean, it was 1.6 million versus their forecast of 800,000. So, I mean, that was 800,000 more people than the Treasury forecast, which is, you know, a lot of houses. I mean, but the thing is that nobody uses the Treasury forecast anyway, really. I mean, but it's just as well nobody uses them because they're wrong.
Well, this sounds like a whole other discussion, Alan, about Treasury forecasts and whether we should believe them or not, but perhaps that's for another time. Thank you so much for chatting again.
Not at all, thank you.
Alan Kohler is the ABC's finance expert. Catch him on the 7 o'clock TV news. This episode was produced by Sydney Peed. Audio production by Sam Dunn. Our supervising producer is David Cody. I'm Sam Hawley. Thanks for listening.